morning, welcome to CATEX TV. I'm Frank Fortunato. Today is Friday, January 8th, 2016. If you want to follow us on Twitter, please go to CATEX TV. United States stock index futures have advanced this morning as a result of payroll growth surged in the month of December. It's the second best year now, 2015 was, for American workers since 1999, and shows further evidence of a resilient job market in the U.S. 292,000 new jobs were gained in the month of December last year. This exceeds the highest forecast of analysts, who have been coming in at about 252,000. The job market durability indicates that employers are optimistic about the economy. This is despite what's been going on the past week. Yesterday, American shares dropped more than 2%, with China's economy bolstering concern that the slowdown in the second largest world economy is going to spread. American shares have lost about $2 trillion in value this week alone. Chinese, meanwhile, have begun to take some steps. Three of them in particular. They set a higher yuan reference currency exchange rate this morning. They suspended a controversial circuit breaker system that had twice halted trading, leading to hysteria in the Chinese markets when the authorities shut them down. And they also directed state-controlled funds to buy local stocks. The Chinese stock market was stable in trading today. Sanford Bernstein analysts have suggested that earnings are not yet painful enough in the reinsurance industry, and that reinsurers could withstand a further one or two rounds of rate softening. In their latest note published this morning, the analyst said increased pressure on reinsurance rates and a suggested return on equity of between 6 and 7% in 2015 meant that the sector was no longer earning its cost of equity any longer. Despite this, the analyst said it's unlikely that the reinsurance market has not yet reached its pricing bottom. Bernstein said that earnings are not yet painful enough. They said pressure is likely to be felt on reinsurance stocks in the short term as investors digest the third year in a row of falling prices, but that it was too early to begin shorting the shares. They remain neutral on the stock performance of Munich Re and Swiss Re. They also said that Beazley, Hiscox, and Lancashire, the Lloyd's carriers, continue to be listed as market reform because their niche and local business are going to continue to be less affected by outside events. They said that Renaissance Re and XL Catlin are also market reform stocks. They noted that the market is overestimating the earnings power of Ren Re, but there's not yet a compelling reason to short the stock. They said that at XL, after the Catlin acquisition, the carrier now should be allowed to deliver earnings growth through cost-cutting measures. They said, we believe overall reinsurance is fundamentally less attractive as a business than it once was, and we'd avoid reinsurance until this has been adequately reflected in valuation. Yet they're not shorting any stocks. Cat modeling firm AIR Worldwide has announced Bill Churney as president, a move that has long been expected for the very risk-owned company. We'll see Churney replacing Ming Lee, who retired from the position on January 1st, 2016. Ling is going to stay on at AIR in a non-executive role until mid-year. Churney joined AIR in 2022 and has most recently served as Chief Operating Officer. The market well knows Bill Churney, and this will be a seamless transition. Congratulations to both gentlemen, to Ming on a wonderful career, and to Mr. Churney on a very good appointment. Third Point Reinsurance, which counts on Dan Loeb to oversee its portfolio through his hedge fund, fell below the price of its 2013 IPO. The reinsurer tumbled 2.3% to $12.49 yesterday afternoon on the New York Stock Exchange. The company went public in August of 2013 at $12.50 a share. According to Meyer Shields, an analyst at Keefe, Bruyette & Woods, he said it was 100% about the investments. The analyst said that Third Point Re's insurance underwriting team is phenomenal. Still, the company's insurance contracts have also generated losses recently, pressured by increased competition from hedge funds. It's interesting, they're owned by a hedge fund. Well, actually, they're not public, they're publicly traded, but the hedge fund is the majority owner and manages their investments. Third Point's John Berger, the CEO, said in an August conference call, that he expects underwriting losses will probably continue for the foreseeable future. After a record-breaking warm month of December, Europe is really feeling the cold right now. An incursion of Arctic air has flowed down across Finland during the first week of this year and spread down to the Black Sea, prompting a significant snowfall in Turkey. Sudden cold really showed on the 3rd of January when temperatures plunged in the Belarusian capital of Minsk, which managed a high for the day of only 14 degrees below 0 centigrade. The temperature in Helsinki, Finland, at night has been negative 29 centigrade, which for your Fahrenheit minds is 20 below 0 Fahrenheit. A massive bushfire that devastated a small town in Western Australia is still burning out of control. 95 homes were destroyed in the town of Loeb, south of Perth. The storm is being exacerbated by high winds as well as drought conditions in the area. You may have seen on social media the giant golden statue of Mao Zedong, which is being built in a farm field in rural Henan province. The statue is 120 feet high. That's about 12 stories high. It's cost $465,000 to build. It's now being demolished as we speak. Demolition crews are there taking it down. Anybody asking questions about it are being warned that if they don't leave the area, cars of people will arrive and make trouble. This is from local officials who are standing there. Well, I guess if you're having difficulty struggling to manage the world's second largest economy, spending $465,000 to build a large golden statue of Mao Zedong and then taking it down before it's finished is not a big deal. That's the news for today. If we have any breaking news, we'll come back and tell you. Have a good weekend. We'll see you Monday.